And it is time for the Word on Wall Street. Top investors watching your money. Joining me right now is Michael Lee strategy founder, Michael Lee, Viridi Funds head of operations, David Khalif, and Infrastructure Capital Advisor, CEO and founder, and portfolio manager, Jay Hatfield. Gentlemen, great to see you this Monday morning. Thank you so much for joining me. And Mike, kicking things off with you with a market that is trading up this morning as we look ahead to a big week of economic data. We are watching Ukraine tensions, soaring inflation, the Federal Reserve, which has begun a rate rising string of moves. And of course, this week, the end of the first quarter. Oh, you say you're not bearish, but you're not bullish. Tell me where you stand with all of that.
Yeah, Maria, we're going to get a ton of economic data this week, and then a week and a half, 2 weeks, we're going to get another core inflation number. What I'm looking for is the month-over-month change of inflation to stop. We've already seen a tremendous amount of tightening. You've seen the 2-year Treasury go from roughly 20 basis points to up to 2.2%, and back down a little bit here. We're seeing inversion across the yield curve. We've seen credit spreads blow out 30 to 50% where you are. You've seen the Chicago National Fed Liquidity Index go from like a 0.9 to a 0.37. So a tremendous amount of liquidity has come out of the market. And if we don't start to see inflation slow dramatically, then we're gonna need to see a ton more of tightening coming from the markets. James Bullard speaking this week. I'm sure he'll be talking about that. Every time a Fed official opens his mouth, they're hinting at 50 basis points for the next meeting. So if we don't start to see inflation slow, we're going to see a ton of tightening across the entire markets, which is going to lead to lower stock prices. But over the last few weeks, I think you've seen the markets the equity markets digest a lot of this. And we went down from 13, 14% year to date on the S&P 500 to only down 5 or 6% now. So that you have bonds inverting, saying recession's coming, and you have equities rallying substantially over the last few weeks. You have crypto rallying. It's definitely in a risk-on environment right now. So what I would say is a confusing period in the market where I'm waiting to see how inflation plays out. I would say the yield curve inverting usually means recession 100 times out of 100. So,
well, don't forget about the higher taxes that may very